we'll understand about market. Okay, let me share the screen. So whenever we start thinking that we'll start trading, okay, what's the first and the second question that comes to your mind? Okay, say you have decided that now I'll do swing trading. So what's the first and second question? The first question comes, which stock to buy? Okay. Then the second question that usually comes is how to buy. Then it comes how to book profits. Then it comes how to select stock. Is this right? Are these questions come in your mind when you first think of let's start trading? Okay. Whenever you first have decided that no, you will now trade. So these are the top questions that instantly comes up the mind, right? But this is not the right first thing that should come in your mind. Okay. The first thing that should be coming in your mind is which phase of market are you in? So people, whenever they are starting trading, they give a lot of focus onto this stuff. Okay, which stock to buy, how to buy, scanner, etc., etc. What they don't do is think for which phase of market are you in. So this is not the first thing that should come in your mind. You're thinking when you have decided that you will now trade, your thinking should first start with what phase of market are you in. That should be the first question be coming in your mind even before you decide which stock to buy. People are in FOMO. Okay, you will see around 90% of the people are in FOMO, whether they have done any course or they have not done any course, but still FOMO is there. They are so impatient that they just want to buy a stock. Okay, that's it. They just want to buy any stock by any way. That's how we all start. Even I started 8 years back like that only. Okay, which stock to buy? Suddenly, you just learn, next day just I'm applying. Nobody wants to think for which phase of market are you in. Your thinking should start from here. Your thinking should start from here because this will help you build expectations. Why sometimes you would have feel that trading is frustrating? Have you felt it? Just write down in the comment box. Sometimes you have felt that, oh, it's so frustrating, kuch ho to raha nahi hai. It's just like waste of time. Why even I am doing like this? Okay, how many of you have faced such kind of frustration any point of time? Avinash says frustrating at the moment too. Anish says yes. Anand says most of the times. Ritesh says yes currently. Yash says this is the time. So we all face frustrations in between. Okay. And why are those frustrations kicking in? Why in your life, at whatever stage you are, why will you feel frustrated at some moment? Because you have set certain expectations. And then if those things are not happening, again and again some or the other trouble is coming. जैसे कि आप डिसाइड कर लेते हैं ना मुझको ये टास्क करना है, बट आफ्टर दैट वो टास्क में कुछ ना कुछ प्रॉब्लम्स कंटिन्यूअसली आ रही है, यू आर नॉट एबल टू कंप्लीट दैट टास्क, सो यू विल फील फ्रस्ट्रेटेड, राइट? इट्स द सेम थिंग हियर बिकॉज you develop certain expectations. Okay, and when those expectations are not fulfilling on a consistent basis, let's say for a month, for a week, for 2 weeks, you might feel frustrated. You might feel like, oh, it's a waste of time. You might feel that why even I am doing like this, why I am here in market. After that frustrations, it will come up to some or the other person. Okay, you will then start frustrating on the other person. It may be your mentor, it may be some XYZ, it may be your family member, your friend, etc., etc. So how to not be frustrated in markets is to build the right set of expectations, because that will determine what's coming up. You will always, or you will in advance know what is going to happen. Okay, and that you will only know if you understand that which phase of market are you in, because markets will have different phases. It will have bull phase, it will have bear phase, and in both you should not expect same. You should not expect same kind of thing in both market. Okay, you will have bull market, you will have bear market, and sometimes it will be simply sideways. Okay, you need to know what to expect in these phases, because that will determine your strategy. Your strategy is not just the setup, it is including the overall market strength also into your thought process. Your thinking should start from market itself, that okay, I want to trade today. Let me first figure out which phase of market is going on. Okay, so that I can build my expectation. If it's a bull market, I know what things can happen. If it's a bear market, you should know what things will happen. Okay, so that you then decide, you then put up your mind in that way. Okay, you make a mindset. If it's a bull market, you will make a mindset that okay, it's time to be highly aggressive. Stocks will give very good moves. You will have long moves, 50%, 80%. There will be a lot of multi-baggers. These should be your expectations. If it's a bear market, you should know that 60 to 70, 75% of the time you will have to sit out. You should know that if it is a bear market, it can go for 15 to 18 months also. In that 15 months, you will have just 4-5 months to actually trade. You should know that majority of the time it will be falling market or sideways market. You should know that in bear market, you will have bear rallies. It can be one bear rally, 2-3 bear rallies. Only those rallies on the upside in that market will help you make money. Rest of the time you will have to sit out. So these all things will determine your framework of how I need to take this. Okay, otherwise this is what happens. You will feel frustrated, you will feel angry. Okay, you will keep on trying and you will see no result. Usually what people do is that after that, either they will change the strategy, the course, they will blame mentor, they will blame family, friends, XYZ. Okay, frustration, like you all know how it happens. Okay, some people are good keeping it within yourself, but most people take it out on some or the other person. Okay, so today we'll discuss how to identify which phase of market are you in, and this should be the first step to think when you decide you want to trade. If you're thinking this, years later you will understand that the first thing should be this. This directly thinking this is mostly because of FOMO. Okay, it's because of FOMO. You have learned today, you want to apply, you want to make money from tomorrow itself. That creates problem. Okay, so let's see how to identify the phase of markets. So this template is already in your indicator. Okay, your indicator stock character. Whenever you will open it on index, it will automatically take the market template. Okay, this is the market template. On any index you will open, you will find it same, like midcap 150, Nifty Junior. You will go and open on any sectoral index also. You will see the template applying there automatically. Okay, so which index we have to see for understanding of overall market? Okay, these are sectoral index. Nifty Realty, Nifty Healthcare, PSU Bank. These only represent a particular sector. Okay, we have to see a bit larger one. Nifty Small Mid 400 Index. This is represents wider 400 companies, because if you will see Nifty 50, then it will give you wrong presentation of the market, because these are just 50 companies, and that too these are all very mature companies. Okay, these are very mature companies in nature. and they are usually very less volatile. So this does not represent what's going on. Okay, this index does not represent what's actually going on in the market. Okay, because these are handful, and in these 50 companies also, if you will see the proportion, then HDFC Bank itself is like 15%. Top 3-4 companies makes up 20-30% of this Nifty 50. Okay, so it's very highly selective in nature. So that's why it's not a good idea to see Nifty 50 and then decide that what's the overall phase of market. Okay, for this Nifty small mid 400 or small cap 250, these two are better one. Okay, so it represents wider. Mid small takes care of mid caps also, small caps also, a bit larger 400 company. So better to use this one. Okay, but there is no hard and fast thing to do. You can use small cap 250, mid cap 150 also. Just don't go with Nifty or Nifty Junior. Okay, and sometimes also people ask, they just see selective sectoral index. Okay, this is only a sector. If market is weak, then if market itself is weak, overall market, okay, if overall market is weak, sooner or later it gets spread across different sectors. Okay, for example, one day market is falling. When I say market is falling, it's like Nifty small mid cap 400 or small cap 250. These are falling. Certain times there are times that some sector is outperforming. But if that fall intensifies or that sideways market is for a bit longer period, let's say 1 week, 2 week, then slowly it goes to all sector. Okay, no sector is then left. Some outperformance by any sector. Okay, say for example, if the market is falling by 8%, okay, then your sector may perform for some days, but eventually then it will also fall or it will go sideways. So overall market support you'll have to see, not just any index. So this question people ask a lot of time. They see a particular sector index and then say this is looking good, so I should do. So is it fine to take only in this sector? No, that's not the right way to look. Look from an overall perspective. If money flows, if it's actually a very good run, money will flow to different sectors. Okay, you will find stocks working. So go with these broader indices that represents a bit wide view. Okay, so let's start with weekly chart. And okay, so here in mid small 400 you have 2019 data. So let's see which we have more and more data. Yeah, this is better for understanding. First of all, we need to understand what's the average length of bull versus bear market. What's the average length? Okay, is it like continuous 3 years will be bull market? What is the history telling us? Okay, what's the history telling us? That whenever there is bull market, it usually goes for how many months? Whenever there is a bear market, it usually goes for how many months? This is important to know in advance so that you know what to expect in next 10 months, 12 months. This is how you make a view for next 1 year. Making a view of market for next 1 year. Okay. How to make a view of market for next 1 year? This is by understanding historically what keeps on happening. Okay, so for this let's first see monthly chart and see the average duration of bull market and bear market. Okay, historically, so we have data since here. Let's start from year 2006. This is where we have data, and look up this. This has been a very good rally in the past, year to year. It gave a breakout up here. It gave a breakout up here. So major move started from here itself in this case. So this was of how many months? From here to here. This is how many months? How many months is this? I'm asking so that you guys don't sleep. 16 months. Okay. Here you have seen that this is a continuous fall. Okay, this is a continuous fall. So let's see for how many months this complete fall was there. You can say here fall, and then somewhere till here it kept on going, 14 months. So here the overall up move was of 16 months. This downfall was of 14 months. After that, let's see from this candle. This is 18 months. Okay. First bull run 16, this bear market 14, then again 18 months. Let's see from here. This some move came up here, right? This was a very long 40 months. 3 years, 3.5 years, let's see till here. 3 years approximate. Okay, continue 3 years of bear market. So this is your bull market, this is bear, this is bull, this is again bear market. Okay. Now let's see from here again. This is how many months? This is the highest candle here. This is 15 months. This is bull market. Any problem is just seeing this. We are not doing anything, just seeing bottom to high, not exactly bottom, from where it started showing some strength above the moving averages. Okay, is this thing tough to do, which we are doing? No. Okay, anybody finding this thing, this simple thing very tough? No, right? At the end of the session, I can tell you sure short way that you will be able to understand market direction in a very clear way. It's not that tough, it's very simple. It's just understanding of the history, nothing else. See here almost 15 months. Here to here, this is almost 13 months. Then you had a breakout up here. This is again 13 months. Okay, now let's see up from here to here how many months bull market was this one. 18 months. This is again a bull market. 18 months. Now let's see this one. Somewhere this went, let's see till here. Okay, 27 months. Almost 2 years, 3 months. Okay, very dull period. This is coronavirus. Okay, after this you had a good break up here. Somewhere let's see from here itself, from this candle itself, this went above 10-20. So from here, this is how many months again? 14 months. Oh, this is again a bear here, this is again a bull. Now if we will see from here, this is again almost 17-18 months. 17-18 months. Okay, it again gave a breakout here, and this is the highest candle. So this is what, 16 months. And this is currently 13 months. Now let's write down all bull and bear and see what was the duration. So bull, this is first one, 16 months. Okay, and this was 2007. So let's write here also. Let's see second bull market. This is 2009, 18 months. 18 months, 2009. . This is now 2013, 15 months. Two zero one three. After that, this is 2016, 18 months. 18 months. 2016. 2016, 18 months. Done. Okay. Then 2020, 14 months. Then this was the last one. 2023, 16 months. 16 months. 2023. Can anyone take out the average of this? Let me open Excel. 16 plus 18 plus 15. Okay, 16 plus 18 plus 15 plus 18 plus 14 plus 16. Okay, this was how many times? 1, 2, 3, 4, 5, 6. 16 around, right? Yeah, 16.16. So what can you infer from here? What is the average bull market duration? What is the average bull market duration now? 16. What's the average now up here? 16 months. That's your bull average. Is this much clear? Rocket science? Did we did some rocket science up here? Was it some rocket science? And this is all real time data. Okay, we are just seeing the charts from 2006. How many bull run was there? It's been 20 in 20 years. How many bull market was there? 1, 6. Okay, total. In 20 years there was 6 bull market. Almost 20 years. 6 bull market was there. An average duration of bull market comes 16 months now. So this figure, you should know this figure in advance. It will help you in figuring out what will happen in next 1 year, 1.5 year. Okay. You will be able to make your view now for next 1.5 years. Now let's do this again for bear market length. Okay. Let's do this again for bear market length. So this was the first one. This is which year? 2008. This is of 14 months. This is next one. This was 2010. 3 years, okay, 36 months. 2008. This is which year? Then 2015 of 13 months. 13, 14 months, okay. 2015 year. Yeah, this one. Then this is 2018, 27 months. Okay. Now this is 2021, 17 months. 17 months, 2021. Okay. Two zero one two 36. Okay, here 2012, right? 2021 done, and the current one, it's going on. Let's say 13 is already done. So just take here. Let's say let's do an average of this first. What's the average coming up till here? 1, 2, 3, 4, 5. Average is 20 months. Okay. $14, 21.4. Okay, 2, 3 people have done. Average is around 20, 21 months, which is coming. Okay. And this is now 17, 18, 13, 14 is already done. Okay, let's take this 15 and then do an average again so that we have 6 both side to compare. Let's take this just like 16 months and then what's the average? The current one, 16 months, let's say. Then what's the average? Around, okay, 20 around coming. Okay, 20 months around the average is coming. In recent 2 times, it has been comparatively less. This was 17 months. And before that, if you'll remove this coronavirus, then it will come 22. So let's do this change up here. Let's take this 22. Now this is one of an event, right? So if we'll do 2018 one, 22 months. Change this to 22. Okay. And yeah, right. Now what's the average coming? It will be around same, I think 18, 19 only. 14, 36, 19 months, right? So that is your average bull market, 18 to 19 months. Take it in that way. Exact to exact, okay, this does not mean that it will be 18 itself. This is an average. You are trying to make a view. Okay, this does not mean in 19 months itself it should start. I don't know why some students get stuck up in such things also. They then answer that it's already 18, it should start tomorrow. Okay, it's not like that. We are taking an average. We're making a view to what can happen based on past. So 18, 19 is your bear market average. Okay. And your average bull market is 16. Let me write down now here. An average bull market 16, 17 months. 16 and average bear 18, 19 months. Now, what can you infer from this data? What can you infer from this data? This is comparable. First, this is of last 20 years. In last six run, okay, both have similar lick. Both in last 20 years. What can you infer from this now? Nobody is able to infer anything from this. First of all, both were of equal duration. Almost equal duration. Whenever they were there, okay. Second thing that you can interpret, they happened same number of times. If bull market, there was 6 bull market in 20 years, then there are almost 6 bear markets also. Both happened equal number of times. Okay, so what does this means? After bear, bull should come, and after bull, bear should come. This is what you can infer. Very basic stuff. Both happened 6 times. Bear market was 6 times in 20 years, bull market was 6 times in 20 years. After every bull, there is a bear. After every bear, there is a bull. And they are almost, okay, 2 months here and there, 2-3 months here and there, but they're almost of similar duration. So when bull market is getting over, you should know that next 15-18 months will be problematic. And when bear market, you are already in 14-15 month, you should know that next 1.5 year can be very good. Seven says, isn't the bear market average affected by the outliner of 2022? 2022. What's the outliner here? Okay, did not understood it. These are the interpretations of what you can expect. So let's say you are here now. Let me ask you a simple question. You are here now in this. You are up here. Okay, you decided to start trading today. You have seen your friends, everyone else making money in the market. You are highly motivated and you are very excited. You are thinking of now buying, completing all your dreams, making up money that nobody can even dream for. And this is where you are at the moment. Okay, so what will you do first? What will be the first thing now? What will be the first thing? Check the market phase. So first you will see where you are in the market overall. For that, what you will do, you will first see where the move actually started. So you have seen this consolidation. You make a simple line here, nothing else. This is a big consolidation, big bear market where no progress were seen. You will see here and here. You come to a conclusion that it's been 9 months now. It's been 9th month. 9th month has been completed when you are starting up in the journey. Now I ask you, is it very good time to start trading up here? What's your overall view now here for next around 8 months? If I see what's your view around next 8 months? Will it be a good money making phase? Or will it be a bad phase? What it will be? You are a 9th month is completed. Now 10th month you are entering. In average bull market duration, we have learned is around 16 months. Money making phase. Yes, Saurav says good phase. Yes. Avinash's major move is already done and I have 6-7 months of runway. So those 6-7 months can be good, right? You don't know how fast will be that 6-7 months. So here you will conclude that, okay, almost 50% of the run is done, but still 50% of run is there, which can happen. Okay. Understand here, which can. I'm not saying which shall happen. Which can happen. That's your view for next 8 months here. Okay. That it will be good phase. Bull market should continue for next 8 months more. And I'll make good money. Okay. That should be your view overall. Now let's say you have entered somewhere here 14 months and now let's say some person is coming to you and he's asking you, I want to invest 1 crore lump sum money into mutual funds. Since I've seen that in last 14 months my mutual funds have almost doubled. And I put very small money at that moment, and now I have more money, more confidence in the market, in the process, and I understand more mutual funds now. And now I want to put a huge sum, 1 crore in the market via mutual funds for next 3-4 years. Okay, what will you say to him? Or assume that this is you. You are not even advising someone. This is you. What will be your process up here now? Okay. Yash says will wait. Saurav says avoid lump sum. Will wait for. Sneha says wait for bull market. Don't expect same returns. Avoid the high. But here, 2 more months have gone now. Now what? You have decided not to put money here. Now these 2 months more have gone. Here, FOMO kicks in and you leave all your concepts. And you leave all your concepts into garbage. Okay. This is how FOMO plays in. But you should know that the average bull market phase is only 16 months, 16, 17 months. 14 months is already done now. So it's not a good time to invest. It's not a good time to be in mutual funds, to put in huge lump sum money in mutual funds, or you are swing trading, then you should know that I'm somewhere near the top of the bull market, and next 1.5 years can be bear market. Okay. So here you will avoid in mutual fund. You will rather than wait for 20% kind of 25% instead kind of correction. And how to infer that? See up corrections almost all the time. What this one was like huge crash. Okay. In 10 years you will have 170% kind of. It's been history. In 10 years there is one big 60-70% correction. So remove, not see this one. This is 42% here after this run. Let me clear this first. This is here 42%, 40% approx. In this phase, this is around 19-20%. Here, if you will see, avoid this candle, this is again coronavirus. In 10 years, one crash will be there. It's been history. Always in 10-12 years, when some or other global thing comes and the entire market crashes. If you'll see here 26%, then this is 2022 one. This is again 23%. This is again 23%. So what can you think now for an average fall? For an average fall now, what can be the average fall when market transitions from bull market to bear market? What to expect first? So for example, today you way of analysis understood that we are somewhere transitioning. What will you now look for? What's the next thing that will happen? Once you transition from bull to bear, what's the next thing that will happen? Sector means what? 30% correction, right? 25 to 30% correction. That's what you will expect when you are moving from bull to bear. How? Because historically that is what has happened. That's what has happened across all times. Okay, 30 to 33%. Small correction here. This is crash. Don't include this in averages. 40%, fine. 20%, 26%, 23%, 23%. So average will be like 25 to 30% correction. We are not talking of Nifty. We are talking of small mid caps. We are talking of what is happening with majority of the companies. What's going on majority in market. Okay. Don't try to do and say to me Nifty 25%. Nifty will be like 10, 12, 10%, 12% compared to this. Okay. But that's not what you are looking for. You are looking for mid, small, broader, what's going everywhere, not just in a single home. So whenever market will transition from bull to bear, you will have 25 to 30% correction. This is a fact that you know now. Now I will again ask you. You are here at 14 month. You want to invest 1 crore into mutual funds. What should be your strategy? What should be your best strategy? Of course, mutual fund is for long term period, but how can you maximize up here? How can you maximize up here? Avinash says wait for the fall. Yes, that's what you can do for your mutual funds also. For our trading purposes, you should know that there will be fall coming. There will be good downtrends which will be coming. Okay. There will be good downtrends that will be coming now. So what should be your expectation? So you are sitting up here on 14th month. What is your expectation for next 18 months? 17, 18 months. What is your expectation then? What's your expectations when 14th or 13th or 15th month is already over? What should be your expectation? Hitesh says correction of 25-30%. Great. What else? Yeah, bear market is about to come. What will happen then? What are further things that you should know on this month itself? Size down your trading. Hitesh says only one person is thinking, in my opinion. Returns should not be there. No returns are there. Of course, less compared to bull market. Where you will make money in bear markets? Where you will make money? In bear market rallies. Yes, Yash is right. Bear market rallies. Now, these rallies are short in duration. We will see that also. Short in duration, like 15 sessions, 18 sessions, 2 months, kind of. That's what you will see. We will see that also. Okay. Go on vacation. Absolutely. This should be your expectation. And actually, you should do it. I do it. Okay. This year, I am going again, 25th to 30th. 2 months back, also, I went to Bali. 5 days back, I went to Jodhpur for 2 days. Okay. And March, April also, I went somewhere. In Meghalaya or somewhere. Oh, Beer Billing, I went. March, April. Go on vacation. Yes, this should be your expectation. Good for lump sum mutual fund. Yeah, this if you are doing mutual fund, you will wait for that correction. If already 14th, 15th month is done, then okay. So you will have your mutual fund expectations also if you are doing. If not, then fine. Not necessary. Ritesh said we should book small but quick profits in bear market rallies. Yes. Quick profits can be one more thing which you should have in mind. Yeah, this is a good strategy of vacation. Absolutely, Vikas. Next year you won't get time. 2026. Going on vacation next year will be huge cost. Okay. I'll go on vacation, I'll miss trades of that will make me profits of 7-8 lakhs. Okay. Invest in gold and silver? Absolutely not. Absolutely no. Wrong thinking. You will have to relate the charts, then do study and then say. Do study gold versus bear market versus gold, bear market versus silver. Do that study like we are doing this, then make some conclusion. Read books. Yes, this should be one of the things. One more thing nobody has said till yet. One more thing is remaining. Back testing, yes, that is more and more research. Research more, review old trades, right? Be better version of yourself. That means one more thing is still pending. Park money in FD and study. You won't be able to do, trust me. FOMO will not allow you. It's easier said than done. Park money in FD. You will not, because there will be bear market rallies in between, right? We have written here bear market rallies. You don't know exact which date it will come. So park money in FD is a false thing. You won't be able to do. Okay. Because you will have to be ready for that bear market rally. Move to 100% cash. No, this is, you cannot do it as a standard. As a standard, you cannot do. Avoid trading. No, not to avoid trading. Revise strategy, psychology, it is, yeah, that is fine. Research and research more. Here, one more thing which you should expect is 75% time will be your sit out time. 75% time in that 18 months will be your sit out time. You will have nothing to trade. And this is where you will save your money. You will save your capital. And this is where this is what will differentiate between you and any amateur. Okay. A person who doesn't want to understand this, he'll keep on trading, keep on giving stop loss, keep on getting frustrated after frustrated. Okay, he will not be able to sit for that bear rally, that small rally to come. That rally can come 1 time, 2 times, 3 times also. And you can make money up there, but you will have to wait for it to come. Okay. If you will not wait, if you want to keep trading, it will be problematic. Okay, some people say you do shorting up here. Yes, for me, it's psychologically tough to do, and it's not worth, because I will tell you as we'll go deeper more into this. Okay, why shorting is not worth. Okay. So this should be your expectation from any bear market. From any bear market, this should be your expectation. Now, how this will help you? How this will help you? How this will help you? The first thing which we started, let's see. Who Vikram says, well, look for EP and IPO setup. Same. Bear market rally will come, it will work. If rally is not coming, it will not. IPO is also stock. Okay. It's too much hype these days. Okay. EP, IPO, but market, if it's not there, then it will not work also. What will happen knowing all this? And why is it important to know all this? Why we are even talking? First thing we started with this only. Avinash, yes, expectations. Very less people attentive, okay. Only one answer I got, expectations. Expectations. And this will keep you in the game for a longer term. Otherwise, you will get frustrated. You will leave. I will tell you where you will leave. That is also a tragic thing, okay? That is also a tragic thing. What will happen? You start up here, you give a shit about market, okay? You don't want to listen. Even though every book says so, every trader, real trader, you will find he will be talking about this. Even after that, you don't want to listen. So this is what your journey will be. I know in advance after teaching, so I'm telling you. You joined market up here, you didn't give a shit about market. You don't want to understand it. You directly started with which stock to buy, how to buy. You kept trading here. You kept trading with full force. Your expectation, no, I'll make money, I'll do this, I'll do that. You will leave the market up here. you will leave. After hitting loss after loss, not able to make money, or even you made money, you were in very smaller, like 8%, 10%, 12% profit, you left hope. You left hope. You went out of market. Okay. Now what will happen again? And this is what practically I have seen around. This keeps on happening. Bull market will come in few months. You will again see, okay, since you were beaten down so much by the market, your all hope was like crushed. You will again see market for 10 months going up. Here, let's see here. You left trading up here. You started here. You didn't give a shit about market. You left trading up here. Frustrated, angry with all the people, calling every person around fraud and blaming each and every person. Bull market start here. Just after you left, you again decided to come up here. You again gain confidence after losing a hell lot of money up here in these months. After losing all your confidence, after losing all your trust, after losing all your support system, you left. It will take you a lot of time to again gain confidence. Okay, then no, it is working. See now, people are making money. You'll again come up here at this moment. Now, what will happen again with you? What will happen again here? What will happen here again? You see people making a lot of money after you left after 4-5 months. So you again decided, no, I was wrong. People are making money. I will again go. I will again try. So what will happen again? Market will beat you so hard again. Okay. Market will beat you again because you again entered at the wrong time. Your expectation again here was very wrong. You again tried with full confidence, with full force, with full trust, full money, etc., etc. But at the end, you again went to garbage. Okay. Your money burned. Again, you left hope up here. Again, you tried for 8-10 months, full dedication. You will have no hope left again. Now, what will happen next? What will happen next again? Again, bull market will come. Again, you will come in 10th month, 15th month, 16th month. Again, market will beat the shit out of you. And I've seen people doing this for 15 years. They do same thing again and again. How do people enter stock markets? You think for a moment, how did you enter stock market? What's the 100% way? Okay, applies to me also. How you decided to be into markets? Write down what made you interested up here. Profits? No. Looking others, exactly. Looking others making money. Hearing stories. Okay, you hear stories. I made this money, I made that money. You see screenshots here and there. Okay, you see random people talking about how they caught up a multi-bagger. You see all those things, and that's what makes you interested. That's what makes me also interested. For everyone it's the same. We see others. अभी तो खुद ने तो कमाया नहीं ना. अभी तो पता ही नहीं है कुछ. So we see other people making money. Then some friend will come to you, some relative or social media, of course, YouTube, Twitter, Instagram. People showing, some person maybe showing his lavish lifestyle, moving in a Mercedes, and how stock markets, he made money in stock markets and bought that Mercedes. So by way of the functioning itself, you start always late. Whenever you are starting, the first time whenever you will enter, you will most likely enter in 10 to 15 months phase here. Whenever, and trust me, course sales are the most in these months only. Okay, as a matter of fact, I'm telling you. Once bull market 7-8 months are gone, 10 months are gone, after that, course sales are the most. This again tells the same psychology. Okay, that people first see others making money, then they gain confidence, then they decide for themselves, they come highly motivated. And by way of structure, you entering the markets are always late. That's why. Because of this overall thing happening. Okay. Your random friend who knew nothing about finance will also come to you and saying, I got this 100% up. I made 2 lakhs in this. I made 3 lakhs in this. Okay. And that's how the start of most of us, okay, the start for 90% of us in stock market is always at the wrong time. Mine was also in the wrong time. I started in 2017-18 here. Here I was started. Okay. Before that also I did some here, but that was like very time pass. Here I took it seriously up in this phase. So 3 months I made good and then I lost good up here in this fall. Okay. Here I was in job 2017, 16, 17 here. I gained confidence up here that market can make a lot of money by seeing others, of course, seeing colleagues in office, talking to other people. I decided here 3 months I made good and then I lost a lot. I kept trading, lost, frustrated up here somewhere. Here again then, but of course it was a passion for me, so I did not lift hope. Rather, I took out the chart and understand. Okay. So, by nature of overall psychology, we all enter in the market late only. And we give no shit about market. And then the moment you leave, everything is move up. And same for mutual funds. If you will see people, more and more people comes up here asking which mutual fund should I invest. And trust me, whatever you say to them, they will invest. That's FOMO. How FOMO plays, nobody can stop any person if he has FOMO. If you have FOMO, even God will come to you, you will not listen. Okay, you will not even try to understand. Listening is a different thing. You will even not try to research. You will not even try to come up with some data. You will not like to do any work. Okay, you just want to do that task. Once you have FOMO for anything in life, not only market, once you are in FOMO, you will do it because that emotion then takes over everything else. Even a person comes to me up here, I will say him, no, wait for 25-30% correction, wait for 7-8 months, you will get a very good price. He will not listen. He will wait for max 1 week, 2 weeks. After that, either he will continuously keep asking, so then forcefully I have to say yes, okay, do. Because then every week I cannot tell same things to some person. Or else he will not even ask me after 2 weeks. He'll ask some other person where he gets that same answer and he'll invest. Next 1 year, he'll say mutual funds not making me any money, waste of time, everybody is fraud, this, that, and then they take out money from mutual fund. This is where exactly people are taking out money from mutual fund. They have stopped their SIP because 10 months are already done. See, it's a very psychological level, this 10 months. So you need to understand this 10-12 months. Whenever people see others making money for 10 months, they decide. Whenever people are not making money for 10 months, they leave. Okay, so here people stop their SIP, they want to leave market. Then where they will come again? When again they will see others making money. When again you will be in 9-10th month of bull market, then again they will come. So as a nature of the overall psychology and things going on in the market, they enter somewhere near to the top. They then exit by in losses or very less return. Then they again enter and they keep doing. I've seen people that are doing the same stuff for 15 years. They're not even understanding their own behavior. Okay. So expectations. This is very, very important to know. Okay. This is very, very important to know what is going to happen next, because that will determine your strategy. That will make you in sync with what to expect. So you will not be frustrated then. So if in last 6 months you have not made much money, you should not be frustrated. It was a nature. You should already know that. That's what I tweeted up here also. In last session, we went through that also. That next 18 months, 16 months will be bad. Okay. And when I say bad, I know that I'll not make much money. Last 6 months, it's been completely disastrous. Okay. Very, very tiring since July. Since here, July, very tiring. But I knew this in advance. I'm not frustrated. I knew this that it will happen. I knew that here itself, I knew that in next 18 months, 10 to 12 months, I will have to sit out. I will have nothing to trade. Okay. I knew that in advance. So when this was a complete downtrend, I was not frustrated. I already knew when this 3-4 months came that yeah, a correction of 25-30% will come. And when it will come, you will have 4-5 months continuous downtrend. And this was the same. Look up, see here. This is January to Feb, March complete. Here also 2 months gone, hardly few rally. So from October to March, you can see that period complete downtrend. I knew that it will happen in advance. I was not frustrated. It was natural to me. I was neither shocked. I knew that I will make some less than 20%. Okay. That's what I knew in advance. Less than 20%, it can be 2% also. Less than will come like from 0 to 20. For people who are very naive, they don't give a shit about market. It can be minus 15% to plus 10%, that range. For me, I knew things in advance, so my expectation was 0% to 20% only. 20% I was taking best case. उससे ज़्यादा कुछ मिल जाता है तो it's good. Okay, bear market rallies थोड़ी और intensify हो जाती है तो it's good. But that was my expectation. What should be your expectation now for bull market? What should be your expectation of bull market? So how is the average bull market run? Average correction you have seen. Now average bull market. Let's see that also. So this was like 80%. Recent one. Let's see from here. Again 80-85%. 60%. 80-60. This was how much? Let's see from here. Again 80. Let's see from here. 140. And this one. Around 80-90. Let's see small mid 400 index also. Last 2 times I think it was more than this. Okay, 80 around. So what's your expectation now? This is the figure of average bull market. 80, 60, 140, 80. What's the average? What's the average? Can anyone do? 4 times 80, 60, 140. %. That is an average bull market. This is how much indexes are moving. Average bull market. Index move, you can say 85% on average. Okay, 85, 86. So 85 to 90, let's take 85 to 90 range. Now if index is moving this, what is objective of bull market? Now it is also important. How much is an ideal thing to make in bull market? Is it 80% good? So this is again where people get stuck. They are making money in bull. Is it good? Is it bad? They never know. They are seeing green, but they are satisfied with that green. That is never your objective. Your objective is to make money in bull market. You have still somewhere you have to think more. That is not an objective. What should be your objective of bull market? What should be, why we are studying all these things? If index is itself moving 85%, you can simply invest in small cap ETF and make the similar money without doing anything. You don't do anything. You know bull market, bear market durations. You now know that there will be 30% correction. After a 30%, 25% correction, you simply put money in small cap ETF, take out money at the end of 16, 17 months. You will already be making 100%, 100 to 120%. That is what you are making without doing anything. Without doing anything, you will make 80, 90%. If you just understood the average durations which we have talked for 1 hour now, okay, just that knowledge can make you 100%. Just that knowledge, nothing else. No need to learn swing trading, this, that, etc. Just this knowledge can make you 100%. Even more than that, because you will start from the bottom. You will start from the bottom. You will start from here. Okay. You will start from here. So what's the objective? Ride winners? Of course we need to ride, but what should be, how much to ride? Where is the thing which you can call that this is good? This is something worth. At least 1.5, 3x range. This should be your objective. It's a big range. It determines upon the least to the upward side. Okay, 3, 4 also can happen based on how good you are now. Of this 80%. Okay, of index, whatever it will be. So money can go from this 2x kind of to 4x, 5x also. Your money. Okay, this is your objective. This is where skill is required. Skill is required to beat index, not to make money. For making money, you don't require too much of skill. You just need right timing of overall market, basic understanding, and you will make money. But you are not here for it. You are working hard, giving time every day. So your objective is to beat overall. Okay. So 2x to 4x of capital is your bull market objective. 4x of index. Okay, index. Index, if it moves 150%, then good. If it moves 60, then according to that. That is your bull market objective. And you should know that in bull market, I will make that. That you should know in advance. Your trading is good, you will make. That's what is in my mind at the moment. Because I am already in 13th, 14th month. I know. Max to max 6, 7, 8 months more. But then bull market will start and I'll make 3x of my money. I have my expectation in set now. Okay. So this is your expectation. This is your objective. This is your expectation from market. At the start, okay, I'm talking about at the start. At 10 month you will come, then again, according to that, you will have 7 months only. You will come in 16 month, you know you are somewhere near top. Okay. Now, how to see like from where it is starting? Is it clear till now? Okay, is this knowledge even useful or you are it's like a waste for you? Ritesh says useful, Avinash says useful, extremely useful. Okay, so develop thinking ability. Okay, more you will think, more you will get. Anirudh says useful, Gaurav says very useful, gold mine very useful, very useful. Great. Okay, great. So let's just take a 1 minute break and then we'll again a 2 minute break. We'll again resume. We'll go more deeper now how to identify point to point things. Okay. Yes. So now let's move on further. So now we have understood about a wider view. Okay, just making a wider view. Now let's dig more into it so that we can go to point thing. So because we will be needing point to point things to actually trade. Okay, to actually how to trade in bull bear, we will be needing more point to point things. But this is how you will set a wider view. You will set first your expectations. That is the first thing to start for, to set up right expectations for coming 1.5 years. Okay, to know how much bull is left. If bear is going, then know how much bear is left, because you can then get ready. Now I am ready, and we are in 14th month, so I am now ready that yeah, 4 5 months, 7 months here and there, but next year at least 6 months I should get a good bull market move. I don't want to miss it. Okay, and where to be more cautious and what to expect from both. Okay, so now let's go more into it, and we will go to now weekly charts. Okay, let's go to weekly charts and understand more about how these bull bear moves. So this is your template which is already there in your EQ stock character, and this is 10 and 20 moving averages. Okay, this blue one is 10 EMA, this 20 is 20 EMA, and this is 63 black line. This is telling you a longer trend. Now it's a common thing in bull market. So in bull market you will have 10 months back to back green. It just keep going up and up. Okay, so what you have seen up in this, one more thing, majority of your months will be green months only in bull market, majority months. So here to here you have hardly 1 2 3 months, 3 months red. Okay, and that too was like not that deep. It got full buying. Look up here, this phase, hardly 2 months of red here and here, all are green. This is one more nature. In bull markets you will have more and more green, back to back, every month up, closing up and up and up. 1 month correction, some pause, then up and up. This is what makes up multi-baggers. Every month it's just going up and up. Okay, so when it is doing this, when it's just simply moving up and you'll open weekly, these will act as a very good supportive points, these moving averages, and these will tell you exact point to points on where bull is starting. Okay, where bull can start or where bear can start. Okay, point to point we can know from here. Now let's see who is most and most attentive up here. Presence of mind. Just see up this chart for a minute. What can you interpret? I want you to think, that's why I keep on asking, otherwise I can do it, I can tell instantly and close it, but you need to develop thinking ability. Okay, just knowing will not help you. You need to think. Day to day you will have to think some or other thing. What are you seeing in this entire bull market? This is a complete bull market of, again, this we calculated 13 14 15 months. What's your observation? Booking profits. What's the characteristic here you are seeing of this entire run? Yeah, some answers are coming right. Deepak says 20 ms support and then reverse. Good. That is one observation. Trend line support. Yeah, that is also possible. Booking profits. Uh, Not exactly here. Salt and pepper, entire bull market, the index did not close below 10 and 20. Great observation. Vikas says after crossover of 9 and 18, bull market appears above 63. Yes, that is the right observation. It's hardly going down of 20 EMA. Great observation. Moving average RNC, great. never close below 20, keep stop loss below 20 EMI on closing basis. Anish, very good. This is where you are thinking. Sneha says EMA start to slang down in an up move. Yes. Small phases not moving but above 10. Yes. In later phases, 18 EMS cross below for some time. Yes. Okay, so now you know the answer. Where will the bull market ends? In this case, where it end? Where it close below this 20. Now let's see after that. Complete fall off. This close below 20 here. After that you have complete fall. Here this one tried going below 20. It did not happen. It went below 10 though. It went below 10 but not closed below 20. In fact, got a good support from there. It finally broke down 20. Very good. No bottom wicks up here. Decisive close. That is a change of trend. After how many months is this happening? After good 14-15 months. After good May 23, this is October 24. Okay, 1 year. Okay, around 18 months, 17-18 months. After 18 months, you are closing below 20. Do you need any further things to understand that there is some change? There is something which was supportive now stopped acting as a support. Right. So this is where you can think that now bear market can start. Where will bull come now on this day you are here? So it's not 100% always. I am always saying a can. I never said a shall. Okay. Here you concluded one thing on this day that it can be a start of bear market here. If you are wrong, which can be, since it's a can, okay. Since it's a probability, it can be either side also. More probability here is what? More probability here is to move into bear markets. More probability on this week itself, you should start thinking that next 18 months will be tough. On this week itself, you should start thinking it. Okay. You should also start thinking on this week that rallies will be very small. It will come in next 18 months. There will be rallies in between, but it will be very small. On this week itself, I'll develop an expectation that I'll make less than 20% return. Okay. If I makes more, it's good, but my expectation I'll keep on in average side only. That it can be 0%, 2% also. It can be 20%, 25% also. Okay, and I will treat that as good. Okay. I will develop everything on this day. One more expectation I will develop that if it's not a bear, if I am wrong, then I'll again change my expectation above this. My expectation will change now above this if it happens. Okay, because we are just doing everything on probability basis. We should always have both kind of views. You are a trader, you are not forecasting things. So you should always be prepared for an alternative view also. If it doesn't, then okay. By just seeing, I cannot wait. I cannot. For example, if it turns up back, that I cannot resist. Like I cannot have a resistance. No, it will go down back. If it's going up, then again, it's going up. I have to change my view. But at this moment, I will develop an expectation that yeah, these things will happen. But above this, I will again change into bull. I'll again change my expectation above this. Now what happens after this? Complete fall going on. See, no breakout of this high till yet. No breakout of this high till yet. Going nothing. Let's see prior one to understand more. This was last bull market after okay, this one. This is previous year. Okay, after COVID. What are you interpreting from this chart here? Let's say this one. What's your interpretation now of this? What are the characteristics that you are seeing? Just your observations. Okay, we are all doing this stuff now for weekly. Okay, monthly we understood, then now we are going at weekly. What's your observation of this chart? Always above 9 EMA, very strong trend. What else? No closing below 20. Yes, it did close sometime here and below 10. Here it closed 2 times back to back below 10 in a very short span. What can you interpret from this now? Most of the weeks closed in green. That's also a good observation. Never took support of 20 EMA grade. That is also a good observation. EMA in upward direction. Yes. Here 2 times back to back it closed below 10. Now what is this telling you? In this entire region, it never closed below 10. You can see this here. Here it closed, but it quickly revamped. Now here it closed. It should have quickly moved up because that was what it was doing. I'm not making up story by my own. This is what is here. It never closed below 10 up here. It closed here, moved very fast. 1 month back, next month up. Now here it closed. Two weeks later. 2 weeks later, it's again going down up here. What is this telling you? Okay, what is this telling you based on this entire thing, this graph? Yes, it's telling you that trend might change. It is telling you that from bull, we might now move to bear. So is it like always we need to wait for 20 EMA close? No, sometimes how is it moving in that overall run? That can also tell you. A close below 10 and what was expected from here that it should move like this. Okay, after this close below 10, it should have moved like the same way. Back to back up solid. Here expectation was back to back of solid for the continuation because that's what it has been doing. But this time it has not done the same thing. It is telling you that there is something changed. Trend has now weakened down. So this is where you will develop again an expectation. You will develop again and plan that here on this week that now we are entering into a bear market. And your view will change again above this or close above this. Until and unless it's closing of this, you will be of the same expectation that rallies will be short-lived. It will quickly roll over. Money will be made less. Simple stuff to do. Now let's see what happens after this. I would have went bull above this again. If a candle closes above this, it did not happen. Went very near, took a rejection, gone completely. Going here. Now this is where. Now what is this telling you? This candle. What is this candle telling you? What is this candle telling you? Trend reverse, yes. Breakout, yes. Beginning of new bull market, yes. Yes. That's what this is telling you. Are we doing any rocket science? Are we doing any rocket science? No. What we are doing? Just studying history. And it will keep on repeating. So here you develop an expectation. Oh, this has given a breakout. Here you would have been a bit worried that let's see what happens, whether it breaks out or not. Next week it gives a breakout. That is telling you that there can be a possibly change of trend. A bull market is coming. Then you again just kept waiting for it to give you some indication of change, maybe below 10 back to back, or maybe below 20. Now this time it went below 10, quickly reversed, went below 10, quickly reversed. Here went below 10, 20 for some moment, but never closed. It had a big reversal up here. Somewhere here it gave you below 20. That is again, you will then make a line up here. And if it closes up again above this, then it's a bull market continuation. It might just be a shakeout. Otherwise, you will have to wait for that thing to happen. It can take 18 months for that to happen. That's what we have studied. Okay, it can really take 18 months. Here it took 18 months to cross back, right? It actually like 14-15 months were there here. October 21 to May 23. Okay, so almost 15-16 months. It actually took 15 months to cross up this high. So once you have an indication of change in trend based on your moving averages, here 10, and in this case it was 20. That's where you set up an line above the highs, recent highs. A close above it will be a bull market then. Let's do it more historically. Let's go this midcap 150 index. Let me remove all the drawings. This one we have completed. Let's see this one now. Let's see till from here. Okay, or else let's go up here. 2024. Let's go from here. So let's see here. This is a close below 20 up. Continuously we are falling. And this one, like this one was 2012. This was a 40% kind of correction. Okay, so somewhere you will here on this week you will make a resistance up here. That above this it might again continue. It gone down. Here it tried, did not work. Now here it's setting up a kind of contraction. This was a deep 40%. So you see for some contraction and a breakout. This is, in fact, this one is better. This is a better breakout, and it got failed immediately. One here you can make a good resistance. This was very short-lived up here. It was a long bear market. Okay, 30 or 27, 28 months this went. Okay, more and more tough, more and more frustrating. Then you have here went below 20 back. You will again try up here. Okay, above this you can again call up here that it's a bull market, and this one went very good. Here went below 10, reversed quickly. Here went below 20. That is the problem. Now again I will make a up here. Here it did not had that much correction. It 10%. Of course this was very grinding. We'll learn how to trade bear market rallies. We'll have to go to daily time frame for it. But first understand how you will see on weekly bull bear. Okay, then once you have decided based on weekly chart that it is now a bear market, once you have decided, then we'll go to daily chart for bear market rallies. Okay, in bull market you don't have anything much to do on the daily chart. Just this weekly, if it's not closing below 20, not closing back to back below 10, you don't have to do anything on daily time frame for understanding market. More or less it's a bull market only. There can be pauses in bull market also, like here pauses. Those are fine, those pauses are fine, but overall it's still a bull market up here. it went changed here, then again changed here. So you change your expectation here that it should move up, but it did not. Here it got a failed breakout. What was the expectation? Expectation was like something like this, which we have seen. Expectation was like this to happen. Should have kept moving up. Okay, but here it did not happen. So you will have to again change that expectation. Okay, you will have to again change it, and again here again it's a bad thing which you are seeing. So you will again do all the bear market things, change up your expectations accordingly. Again, you will make the high of this as a fresh bull market, and it happened somewhere here. Took good months, June 16, and then it went up here. This is where you will again develop a bear market. That market will be bad now. It can take months up here, but this one turned out not a bear market, but more of a quick correction rather than a bear market. So that's why we have both kind of views. Okay, here you developed an expectation that it will be very good months, but some news, some external factor, XYZ, there can be like 100 different reasons. It did not went that way. Okay, it had a quick correction up here, and then just after that correction again it gave a quick breakout up here, and it then worked. Again, see here you had a big break of 20. Again you will be up here, you will become cautious up here, but then you will have an opposite view also. So what I will do up here on this day, I will then not take fresh positions. I'll wait for some daily time frame kind of rally. Okay, but again above this you will again be bullish. So you'll have to change them accordingly. Sometimes they can be just a big shakeout, and whether it can be a shakeout or not, of course your monthly time frame will help you, because you now know the average durations. Okay, you know the average duration of bull market, bear market, but there can be shakeouts in between, some external news, XYZ. Okay, so based on that, yeah, this was demon, right? So based on that, there might be these shakeouts, but you should know overall that it can be a shakeout also, or external news anywhere can hit out of the box also. So it can be quick drop 3 months and quick backup in 2 months. Like here, quick drop 2 months, quick backup in 2 months. So this is your wider view. In between, like here you will see shakeouts. So how to handle them? Okay, so there you use a mix of both of your knowledge of monthly time frame, weekly time frame. Of course, when you are trading, you have your stop loss and everything in place to that detail of risk management. Okay, so you don't have to worry too much for it. So after this, it went good. One 1 week shakeout, and then again back into week, and again kept going up and up, and nothing to worry here. I will worry here for once, but my worry was quickly over in 2 weeks. Good thing. I will worry here. It took 2-3 months, but my worry will be over up here. In fact, I will start trading somewhere here that we will look up on daily time frame, because bear market will have rally, so we will be preparing for that also. We don't have to wait for here to break out for a trade. We will start from bottom. If it doesn't break out, it reverses, we will do it on daily time frame. Here again below 20, so then here, and this one will be more and more relevance to me, this 20. Why? I will be more and more serious up here. Reason? Can anybody understand why I'm more and more serious here? And still here I'll be more open. I'll be more open-minded up here. I'll be more open-minded up here also. But here I will be very less open-minded. Okay. I can wait up here that it can be shake out and it can again move up. Same way here, I can give it some more chance to think for. Here I will have very less open mind. Here at these two I'll have more open mind. Reason? Complete in 16-17 months. Great. Bull time period is coming to an upper side. Great. So now you are thinking all things together. Now you're thinking that yeah, these can be shakeouts, smaller one. But this can be a serious one. Okay, because it's happening at the upper side of your average duration. Great, good work. Yeah, now this bull market going continuous. This is a big crash, so now I'll be looking at high of this. Okay, such deep few weeks. This is coronavirus crash, so I'll go up high of this to call it again as a bull market. Here again 10-20, very good going. Back to back 2 times 10 close here. I'll be more and more serious up here. Why? Because this is again happening on an upper end of 13, 14, 15 months. After 13 months, I will take it as an upper end because I don't know. Average is 16, 17. Can start from 13th month itself. So after 13th, everything is on an upper side. Okay. So I'll be worried up here and then I'll change my view up here. I'll expect some correction. 25-30%. It is 23%. Well, good. Again up here, I would be less in these two candles, less worried. But here I will be worried. Here back to back below 10 also is a sign of worry. Then below 20 is final worry. I'll again make above high. So when will now again a bull market come? When will now again a bull market come up here above or close above this? Our average duration, it's been less currently. It's been okay 14 months near to after 13 here also it will be on the somewhere upper side of bear market. Okay, maybe 4 months, 5 months more. That should wait. That should wait. Okay, so I'm expecting now bull market to come from February or March, April. Okay, you can take plus minus 1-2 months here and there. If it happens early, it's good. After 13th, it's like on an upper side. If it happens in next month itself, it's good. Okay, coming early is no problem to me, right? It's good thing. After 13th, you are in an upper side of bear market at somewhere near the last 20%. Okay, so whenever it comes then. But I'm happy now that this period is almost gone. You should feel more confident now. You should be re-energized. You should do more and more research. You should be more attentive from now onwards. Okay, because any moment in the next 5 months you may start a very good run. Okay, that's why you want to then do some vacation. So these are good periods for vacation. Even if you don't trade, it's fine. You trade bear market rallies, it's good, some money you'll get. Even if you'll not trade, it is fine. Now let's see up here and identify in bear markets about rallies, how to play up them. So overall you will get 3 chances. That's what I have seen historically. 2-3 chances, sometimes 4 also, but majorly 2-3 chances to make money in bear market. Okay, rest 75% time, nothing to do. Of course, there are things to do, but nothing to trade, nothing much to trade, rather I should write. But you'll have to be prepared for that rally. So it's like research and everything. We have gone through that list that you will have to keep doing. Okay, because you don't know in advance that from where that rally will start. So you'll have to be aware. But overall, 75% of the time there won't be much things to trade. Now you can see these up moves which are coming up in all the bear markets. After this continues down up, this is a tradable rally. 4 months were tradable. See here, these 2-3 months, these are good tradable. Sometimes even in these candles, it might look that there is nothing much, but some moves can come in such sidebars also. So this all PSU banking moves. Here, almost all PSU bank moves happened. December 22, let me open 1-2 chart for you. Or let me open PSU bank chart itself, easy. December 22. See, November, December 22. October 22, it started. Here. Very, very good moves came. So, have to be prepared for such rallies. December 2022. See this one, November, December 2022. This is November, 100% of UCO Bank. Almost all PSU bank move 50, 60, 70, 80%. Okay. So it's not like you cannot make money in where you can make. Okay. And in this bear market, last one, if you would have waited, then this one was still very good bear market because of these all PSU bank moves, and this 35-40% could have made here. I think I also made similar 30% around. I don't remember exactly, but this one was very comparatively better bear market than this one. Here you have more and more sideways movement. Here even this sector moved up good. Here now look up on the daily chart on first gone weekly. Now these are rallies typically. Good rallies up here. You see this move up. Here you had PSU banking move somewhere here itself. Good. But it all happened, all these PSU banking were also in these 2 months only. After that, it also went into correction. A very short rally was there. It's not a very big rally. Almost in 3 weeks, all rally was done, and after then, they all again crashed 50% because overall market did not support it. So these were like 2 plays could have done here. Third, this was bull above this, but this is also good rally up here. So in every phase, after a correction, rally comes. Okay, so you'll have chances to make money, and if you have patience, wait for them, you can like make 20-30% of there also. But you will have to be patient because these are really short-lived. Let's go on daily chart now. Look up this, and of course not easy. These are not too easy rallies. It will have up and down. Like here, you look up this. After this correction, you had this few weeks good. From here March to here, March to June, almost 2.5 months. Best rally was this here. These 1 month, 1.5 month was the best. Very smooth moves. Okay. Completely above your 10 EMA. So these are money making periods, good money making. This was bit chop, not too easy. Like stop loss would have hit more here. Here stop loss would have hit very less. Okay. So in bear market, first thing you should know your accuracy expectation. Even in bear market rallies, it can be tough. You should know that you'll make less money, you'll hit more stop loss. Okay, you should not be too highly aggressive. You should be open to more and more towards the risk side. Okay. And after that, you have this very, very poor rally. You see how these two rally are different. Hardly 2-3 red days, at least showing some progress. Here, this one. Here you don't have any progress. Very, very poor rally. Hardly 2-3 big movers you have here. 4%, it almost took 1.5 months for this 4%. And here it moved 8% in a matter of few sessions. 1 month. Here 2 months already gone and nothing going on. Poor rally. But 1, 2, 3 rallies you will have. One rally was here. This was fine. And you will have such short rallies only. Sometimes 15 sessions, sometimes 20, sometimes 1.5 months. That's it. Shorter 2-3 periods. Now let's see what happens next. Here you have these. This was last bear market, and it was a very good bear market compared to current one. You have very like there were good moves. You have this rally up here. You have this green area to play. You have this huge. See how good moves. Compare this rally to this one. You have this big rally. How smooth. Very good money making period. And look at this. It was a bit choppier, this rally. It had this period was good up here. A very shorter one. Here you had a very big, very clean moves. Okay, almost 18-20%. So if you are doing good, then at least 20 you will make up here. Okay, in bear market rallies, you cannot think for beating it by 2x, 3x. Okay. Now in this rally, your expectation should not be to beat this by 2x, 3x. It will not happen. These are bear market rallies. A lot of chops will be here. Accuracy rate will be less. Very skewed movements. So overall, this is looking fine on face, but this will be tough. Okay, when you will execute it at that point of time. So your expectation, if this is moving 19-20%, even you make 15 year will be good. But this is a bear market rally, very shorter one. Okay. So here also, if it is moving 9-10%, even if you make 5% here, it is good. In bear market rallies, you should not expect to beat index by 2x, 3x. Even if you around it, you trade it good. If you beat it, which is also possible, if with laser focus you are doing work, it's very good. So here you can make 30% to 15% range based on trading and psychology. Here we had a lot of good moves in this case also. All PSU banks, some shipping stocks. I think I still remember this day. This I think Mesdoc showed a very good buy up here. This is 30th September 2022. Let me see it. 30th September 2022. 30th September. I think shipbuilding went very good. 30th September. Yeah, see this one. 30th September. This huge rally in here. GRSC also was moving good up this point of time. Around same time. See this one very big move. September, 27th September, same time. Very good move came up here also. So you are having such opportunities up here. So opportunities do come, but you'll have to wait patiently for them up here. So where were we? Yes, here. This very good rally, this good rally second, this was third place. Even if this was sideways, sectoral move were good. So that's why you'll have to keep trying upon. Okay, see how stocks are moving, whether you are seeing some moves coming up in your portfolio across stocks which you are tracking. So based on scanner stocks are coming, what's happening to them. You see all those things and then you decide your position size, how aggressive you will be, both things. Here you had 3 rallies, then here also you will start trading from here in the green region itself. You will not wait for the breakout, right? Breakout will then further confirm a bull market in this case if we close good. But your trading actually starts from here because you are trading the bear market rally. If it transitions, it's good. If it reverses, it's fine. You'll get out. Okay. So this again, good third rally, and then it actually transitioned into a bull market. If you'll go back, you'll find such things keep on happening. Rallies do come, and these are tradable rallies where you make good money. So this was coronavirus crash. So bull market started from here when you gave a good weekly close above this, but you will actually start trading from here itself somewhere. Here you will start trading. Here also you will try. Here also you will try, and then it moves up. Okay. Based on these moving averages, you will trade up these regions, green regions, red regions. These are all past, but moving very low volume up here, but still this was a 2017 demon came. You will start trading here itself. Here again it will confirm a bull market on weekly close. So you are actually moving after the correction itself. Okay. Here your expectation will change. Here my expectation will be only for a short rally. Only for a short rally to move up and then move down back. But it didn't happen. It gave a breakout. So after confirmation, my expectation will again become bull market. Okay. Same way, these all green regions are tradable. Sometimes they will be 2-3 months, sometimes they will be short lived. You don't know in advance, so you'll have to keep trying them again and again. Nothing you can do for knowing the exact duration in it. Okay. Just a second, we'll take. I have muted all. So you'll have to keep trying up these rallies carefully. Okay, sometimes it will be 15 sessions, 10 sessions. Sometimes, like we have seen, it can be 2 months, 3 months also. There is no way to know in advance that which green region will be more or which green region will be less. It's just trying. When I mean trying, it's like you buy stocks, you buy with a lower size, then you see how it is working. Also, you see how overall things are moving, whether breakouts are working, whether breakouts are not working, whether follow-throughs are happening, or just after a momentum bar things are going down. It's more of awareness. Green region plus awareness, both things you'll have to do. Okay. So in bear market also there is work of trying, and but your expectation should be different. Okay, your expectation should be different. So when you are playing up in bear market rallies, let's do that thing also. Whenever you are playing in a bear market rallies, you want to play up these green regions only. Basically, it's not necessary even to wait for green to come. Let's say here you have a 10% correction. Okay, and now you are moving again above 10. You can wait for 2-3 candles up there above 10, or 2 candle, 3 candle, good, and then you can again re-enter. Likewise here you won't try anything. Okay, know when to try. In this phase, it's stupidity to try up things. 10 in 1 will work, net nothing you will get. Now few people may say that we can short up, but trust me, it's very psychologically tough to do that. In shorting also, you will not find much momentum up here. Reason is, it's not a back-to-back fall. In shorting here, you will get good momentum, but look, is it worth for these 6 days? It's hardly 6 days. For shorting also, what people get confused is, it's not about just downtrend. It should be with intensity. That's where it will move down. Otherwise, here it is just stop. You will short up stocks up here, it will just stop. It will neither move up, neither move down. It will move down from here, just 6 days. So short fall of intensity are very less days. 5 days, 6 days, 7 days. Only at that moment short will work. Short will not work here. Short will work here. Here short, it's very tedious for shorts to work. You will hit stop loss after stop loss and shorts also. Because 2 days up, 3 days full reverse. 3 days down, then full reverse. 2 days down, then full up. So short will also not work here. Here neither short will work, neither long will work. Here, from here to here, long will not work, short will work at last 5 days. Here, your short will work up somewhere mixed here. Here, your short will not work because it's not going anywhere. It's neither going up, neither going down. Okay. Similarly, every fall you will see fall with intensity are of very, very small time. Even in that 18 months of full bear market, you will have 1-2 time only it's happening. So, like, see up this one also. Here you had smaller. So short will work in these 3 days. You start shorting here, your stop loss will get hit here. 3 days here, 2 days here, 2-3 days momentum here, 2 days here. That's it. So for shorting timings, just like too much to do. And what happens is you will keep on shorting and market will give this bear market rally. You will lose here also, and then you will skip this also. So this is my experience with shorting in stocks. It's not worth as per me. Of course, you can make some money by doing it, but it's tedious. At the end, you will have to think from a perspective of efforts versus money also. Efforts versus money also. You'll give huge efforts here. Even if you'll make, you will not be able to do it too much aggressively, because when upward rally comes, it comes very, very quick. It comes very, very quick. This very, very quick. So you will do short, like it's just for the sake of doing something you want to do, then it's fine. But what I have learned it based on last 8 years that shorting is not worth. People keep on doing it, but when you'll ask them that how much percentage of money in last 8 years was from short versus from long, 95% will be from long only. And in fact, if you'll read Mark Minervini books, William O'Neill, these are like legends. Okay. Everything that we have learned is somewhere relates to these books only. Plus J.C. Livermore, plus Jesse Steen, all have the same opinion. They short money that they made on short from 30 years of trading was like 5%, 8% only. In all of the books, they do short. It's not like they don't do short, but it's never that aggressive. Okay, like when you are buying, it's very short, small quantities for sake of trading, for sake of some kharcha pani. That's it. So, and when you will do it, you will realize it that it's not worth to learn up a skill, to change up your psychology. You have to do a lot of expectation thing in your mind for doing both stuff. But just for these 2 days of fall, I am not willing to miss out this for capturing up these 3 days. Because after these 3 days, you buy something here, your stop loss will hit here. Because you sold up something here, you shorted it, and 3 days back it's full up. So for short, you need extreme tight timing. Okay. And short rallies are very, very small in phases. It's not long. Like, where have you seen shorts going on like 30% single side? Like, you see of this move. Have you seen such kind of shorts happening? Single side. Never in past you will find such shorts. You will find in this way only. This lethargic way only. Again and again moving, crossing 10, 20, again and again going above 20, back to back after every 10 days, chop highly. So short moves doesn't come so big. So why to focus on them? See up this, in this you try to short, you'll keep hitting stop loss after stop loss. No downside momentum itself. It's neither upside, neither downside. For short to work, you need only the downside. If it's sideways, तो आप दोनों साइड स्टॉप लॉस जाएगा. So nothing to do up here then. You'll have to wait for that green region to come. Okay. So I don't short now, and there is no short setup also. The reason is the same. Short rallies are like you need too much into timing part, and that too it's very small. Like here, if you're shorting a stock up here, it will work. Or here, if you shorted here, you will lose money. Your stop loss will get it. Because short falls are very short. Sometimes it can be just 2 days, sometimes can be 4-5 days maximum. That's it. It doesn't happen that index is falling day after day for 30 days. But on the bullish side, it can happen. On the bullish side, it does happen. Okay. Like look up here, very, very small, tiny red days. Only one red day big here, 1, 2 here. So on bullish side, you can see that thing. That bullish momentum can keep on coming, but it doesn't happen with bearish one. Bearish momentum doesn't keep on happening after and after every candle. So then it's a skill, of course. At the end, it's your choice. You want to learn it from somewhere or you want to do that stuff. It's up to you. But my personal understanding is that it's not worth. Okay. If I know that 95% of will be long, that why I'll put efforts for that 5%. Rather, I'll put more and more efforts in doing that long thing more better and beating up the index more and more in the bull market. That's where I'll put more effort because that's where more of my money will be made. Okay. So for the bear market rallies, first of all, you identify up the phase. So this is how it will move step by step. Let us conclude now. First is phase of market. Know so that you develop next 18 months expectation, 17 months expectation. Okay. Second, if bull, you don't have to worry, just follow the weekly, keep on trading, nothing to worry. Okay. If it's bear market, you saw suddenly that, okay, few weeks back 20 was broken and you have set up your ranges, then in bear you will have to wait for bear market rally. For bear market rally, these are green regions already in your indicator. Basically, these green regions are just these crossovers of moving averages. So 10-20 crossing, so green region, 10-20 going down, red region. Okay. And in these rallies also, below 10-20 is a area to not trade. Okay. Like here, you are going below 10. So you will either trade very less here, position size will be less, below 10. So it's green up here, but it's going below 10. So your position size will be less. So just you have to be a little smart. Don't wait for red region to come. In green region itself, you're getting some indication, you start reducing trades. Below 10-20, you will not initiate any new trades. Okay, I will again write in bear market. Don't initiate trades below 10 EMA. Okay. Even if we found some sector thing going on, some sector momentum bars coming, size should be low. Okay. So don't initiate, but if you see some sector thing going on, some momentum bars coming in your scan, then you can give it a chance. Okay. Maybe after some correction, after some 7-8% correction. This is like 7% correction. Then you can still try for those things. But when you are just crossing, it can be more chances will be of stop loss hits. Okay. So here you will stop new positions up here. If you are having something, if you're already holding some stock, then say for this you are having stock already, you are in this rally. So in this rally you have some 15% gain stock, some 10% gains, some 2% gains. You can book some part into it, move stop loss to cost. Okay, you have to manage the risk. Then there is no single way. It can be moving stop loss up to your cost. It can be booking some part profits. But below this, I will not buy any new. Until unless again I'll go high above this. Okay, so I will not buy new. Let it again come up 1, 2, 3 days and then you can again go it. But this is a cautious, now see, good fall. Tried 1, 2 days again. Here, big fall. If you buy something here on this day, 99% chance you will hit stop loss because it's a big fall then. It's a 7% fall in 3 sessions. So your stock will hit stop loss then. So that's why you don't buy below 10-20. You don't initiate position. After a fall 7-8%, you can still try. There is no like short way for it. But after 7-8% correction, you can again try. You can again try with small. Let's see whether it turns the range, whether it moves above 10, 20, 3-4 days. Okay, whenever it moves 3-4 days above 10, you have some indication of positive side. Then it can change up this region from red to green. Okay, let's say here in this entire, you have this one, some positive stuff here. Again went down, then 1 day, 2 day, not much. Okay, average. Here you had some 2-3 days up. Look up now here also. What's this overall correction? Some knowing that basic data is also useful, which we looked. This is already 25-24%. So you know that you are somewhere in lower range. Whenever you are crossing 20%, 23%, you're knowing you are in lower range. Okay. So then you can, instead of waiting for the green region, can just start with 10 EMA up. So here 10 EMA up. So you can start trying then. You can start trying here itself. Okay. So first step is to wait for green region. Okay. On daily time frame. For bear market, everything we are doing is on bear market currently. Okay. Bull market, everything is on weekly. Nothing to do too much in it. Go before the green region also. After some 7-8% fall. I'm writing intentionally 7-8% because that is some good kind of single side fall. Okay. 3% you will not try below 10 EMA. Okay. So after some 7-8% you can try 2-3 days above 10 EMA. Can try it. Of course it's a green region, then there is nothing to be asked for. If it's red, then in red region you can also enter. If 2-3 days you are moving up the 10 EMA, if there is 7-8% fall already, if indices already 23-24 corrected, then that's, you are seeing 4-5 months of red region. This is like 4-5 months red region at fully corrected 25-30%. Okay. So these are some way to trade up the bear market rallies. Okay. These green regions are crossovers of 10 and 20, and it is showing you that some up move can come. It can be short of 10 sessions, 8 sessions only. It can go for months, 2, 3, 4 months also, like in this case. Below 10-20 in bear market, you should avoid any fresh trades. You should become cautious. For existing stock, you should try to manage risk. You should capture some, should reduce size. Okay. Fresh trade you should not take below 10. You should then again wait. If it goes below 10, then again wait it to show a green region or 3-4 days back above. So for example, here it went below 10. So you then wait for 2-3 days upside. Here it tried moving up but did not sustain. Here went below 20 also. Region is still green, so but I will not buy anything up here. I'll again maybe from this candle, I will again restart. I will again restart and do good from this, or maybe try something here as it is trying moving up 10. But here I will not take trades. Once it is red, then I'll wait for some correction again. So these are few ways. There is no certain way, just a real-time feel of what's actually going on. Okay. And it requires attempting. Okay. Because sometimes it can be very short rally for 5 days only. So you should not get frustrated because you already have that expectation developed based on your wider view that these are things to expect now. This is what you should have started expecting from here itself. From this week itself. That's what you should start expecting. It will be tough. Prepare mentally yourself. It will be tough. Next 18 months will be tough. Okay, that's how you figure out market overall. In based on bull bear and bear rally regions, up move, down move, 2-3 rallies will only come. It will be tough, it will be frustrating. So develop right things in that way. So is this clear now? Market direction. We discussed a lot of market direction, almost 2 hours done now.